Hello everybody and welcome to another video. In this video today, we're going to talk about one sector of the markets in this financial crisis that could be one of the largest dominoes to fall and would unfortunately put us in a position to make 2008 look like a walk in the park. We're going to get into that right now. So what we're going to be talking about here, the largest of the dominoes that will probably fall in the near future here, is Blackstone. They are an investment firm which is the world's largest alternative asset manager. Primarily, I will tell you, a lot of their holdings are in real estate and REITs. I will not go into all of the explanations there, but basically, if you want to invest in a large real estate project and you don't have that kind of money, they will basically sell out shares of that investment for people to come in and invest on their own, and get a portion, of those proceeds back for them. So it's a very big company. They've been in business for a while, but here's the thing. After 2008's market crash, real estate firms like Blackstone and others were buying up all of the discounted properties, helping establish a footing in the market, but also picking things up for a fraction of what they were worth a few years prior. This enabled them to grow quickly and to expand these businesses and these offerings for their investors. Well, what has happened recently is their investors are starting to see that it looks like we're at the peak of the market post-pandemic and we're starting to move back down some. Well, this signals to investors that now may be a good time to get out while the getting's good. So people started exiting the fund. It doesn't sound like a bad thing until you realize this has led to a lot of problems for Blackstone. Let's look here. First, as people start to exit, the CEO of Blackstone here says financially distressed investors are the cause of the redemptions in the REITs. In other words, we want our money back. And so he's blaming the investors and saying they're strapped. I don't necessarily know if that was the case, but I would think more it's along my original line of thinking. You see that the market's on a downturn. Why would you keep your money into an investment that is likely to lose out in the next 3 to 5 years? So you get out while the getting's good, right? So I don't know that they're financially distressed. There have been some hard times, but I think if you're at a high enough income level that you're investing in things of this nature, this investment probably isn't a make or break thing for you. I think more likely, like I said, people saw the forest through the trees and knew it was time to start getting out. So their CEO blames investors, but I think we know what the real cause is there. People are just wising up. Here's the beginning of the problem. When people were trying to exit that fund, this is published December 8th, 2022, Blackstone limits the withdrawals from those funds. And I want to say, I don't know for certain, I'd have to do additional research, but even for a period of time, I believe they may have informed certain investors that they're just locked. You're locked in, you're not going to be able to withdraw this money, and so no, you can't pull out of this investment. So that's concerning for investors and kind of signals there that they're in some financial trouble of their own. This was December. Now remember, this is a global company. Let's move on to March, something a little more current. Blackstone defaults on Nordic mortgage-backed bond. So they had a 531 million euro bond backed by a portfolio of offices and stores owned by a Finnish company. And amidst the rising interest rates and other things that were going on, they had to sell off some of those assets to try to mitigate the losses, but they still defaulted on somewhere in the neighborhood of 300 million of this bond. And that's huge. And so we're starting to see the ripples. That's obviously over in Europe. And we're starting to see some trouble here. And with the bank failures and the government's already starting to do what they can to bail out people, if and when this domino falls, it is going to make 2008 look like child's play. I can't tell you. Some of us are the younger class. If you weren't a homeowner, if you didn't have a very serious job at the time, some people kind of skated through 2008 and it didn't look like a whole lot of difference. Depends on the state that you were at in that time frame. But anyone with a mortgage, anyone who had lost a job or had, been cut back, it was actually a pretty bad time for a lot of people. Not as widespread as something like the Great Depression, but the ramifications and effects of that financial crash were felt by many for a long time, over probably a decade. So this financial crisis, should companies and, well, I guess this is an investment firm, more or less, should investment firms of this magnitude really start having trouble and defaulting on many of their investments, we don't have enough money to cover. Too big to fail reaches a critical mass where there's not enough money even to print to save some of these companies and investment firms, and it could get really bad in the coming years. So keep your eyes open. Obviously, I'll keep you informed of the things that I see. Keep stacking your metals and prepare yourself. Make sure you have enough food. Make sure you have some protection. Get your house in order. Now is the time. I promise you, it's better to be prepared than not to be. We're probably already a little behind the curve on this one. It seems like things are developing quickly. So make sure you're in order and keep your eyes out for news, especially things like this, because until I started doing research on who else was about to fail, who's in trouble, things like this, that's when I discovered this. Now, I already knew who Blackstone was, but I was not tracking how much trouble they're in, and nobody else is talking about it because they don't want to be the bearer of bad news. But you need to be informed. So I made this video. Tell me what you think about this in the comments. Tell me what you're doing now to prepare. Are you adding extra silver and gold to the stack as you're able? Are you more focused on food and other issues like security of your home? Tell me in the comments what you're doing currently to prepare for this theoretically very close and looming financial crisis. All right, I appreciate everyone's time and attention. I will see you in the next video.